Hello, everyone, and welcome to the fourth session of our Summer Uranium Conference. We're going to discuss USA and Niger uranium companies. I'm David Talbot, Managing Director and Head of Research for Red Cloud Securities. And during the next session, we will hear from some of the active companies in the US or Niger. So during this session, we have Anfield, Energy Fuels, Encore, Global Atomic, and Consolidated Uranium. Now, each company has 10 minutes to present, and then after all speakers have their turn, we'll have a 20-minute roundtable session. Viewers, as always, please feel free to ask questions. Type them in hit that Q&A button on your screen and type them into the chat, and we'll get to as many as we can. So let's get to it. And up first, we have Corey Diaz. He's CEO of Anfield Energy. So Corey, why don't you take it away?
Great. Thanks, David, and thanks everyone for joining. We'll have a quick overview of Anfield Energy. It's a company with uranium and vanadium assets in the United States. Safe Harbor, please read at your leisure. We recently closed a transaction with UEC where we removed significant debt from our balance sheet, traded away our ISR properties for conventional assets, and increased our vanadium endowment twofold. We currently have a company with no debt, with a strategic shareholder in the form of UEC, and conventional assets underpinned by the Shooting Canyon Mill, one of only 3 licensed, permitted, and constructed mills in the United States. We've been doing a lot of work when it comes to right-sizing our balance sheet. We're now focused on our conventional assets. The map to the right shows the properties on which we are focused. The Shooting Mill is the yellow dot. Velvetwood, Slick Rock, and West Slope are uranium and vanadium properties through which we plan to commence production, and the mill itself will be the conduit through which we do produce. The transaction structure, as I mentioned, related to a settlement with UEC. We did swap our Wyoming properties for the Slick Rock property in Colorado. We did raise money recently in order to settle some debt that was outstanding on our company for a number of years, and we provided shares to UEC insofar as UEC is now a strategic shareholder and has the ability to continue to participate in financings going forward on a pro rata basis. So we believe there's a long-term relationship inherent with UEC at this point. As I mentioned, we have a mill, one of only 3 licensed and constructed mills in the US. We do have plans for commencing production in the next 2 to 2.5 years. The feed coming from Velvetwood, Slick Rock, and West Slope is certainly the path forward for us. Frank M and Findlay Tank are assets which would be considered secondary or tertiary assets within our portfolio. And we believe that the vanadium endowment that we've acquired could create other opportunities for us when it comes to looking at clean power, renewable energy, and battery technology moving forward. Capital markets profile. We have roughly 624 million shares outstanding, a market cap close to 50 million at the moment. Uranium Energy Corp is our largest shareholder, single shareholder at the moment. Institutional investors represent about 30% of our shares outstanding, and management and insiders hold roughly 4 to 5% of the company. So in terms of peer comparison, our market cap is significantly lower than our peers. You can see on this slide. Our resource, albeit small, is still significant enough to create a long-term production opportunity within the United States. We also show a significant vanadium endowment, which in our view is the largest in situ vanadium resource amongst publicly traded companies at the moment. So there is a significant opportunity for us to participate in that sector moving forward. An important part of this slide shows the production facilities and who holds and who doesn't have a production facility. We think that amongst our peers with production facilities, we trade at a significant discount. We think that there is an opportunity for us to meet the valuations of our peers in the near term as we do go through a re-rating, given that we've removed significant debt from our balance sheet. The picture on the right shows our mill. As I mentioned, one of only 3 licensed, permitted, and constructed mills in the US. On the conventional side of the business, 750 tons per day. The properties that we aim to put through the mill include the Slick Rock asset that we acquired in Colorado, about 11.6 million pounds of uranium, 70 million pounds of vanadium. The West Slope project, which consists of 9 different mines. We did put a resource out a couple of months ago, addressing 4 of those mines, about 5.4 million pounds of uranium and 27 million pounds of vanadium. And we have other historic pounds tied to the other 5 projects. The aim is to put economics to those 4 projects on which we have resource currently. And then finally, the Velvetwood project, which we acquired back in 2015 from Uranium One. It's a past producing asset with 4 million pounds of uranium and 5 million pounds of vanadium. We do have a 4.6 million pound uranium resource on the property already, and a PEA tied to the project from 2016. So we do have a path to production with one of those assets currently. We certainly will be moving the other assets forward to the point where we do have economics and understanding of the economic viability of the projects. There's a little bit more detail related to the Slick Rock project, which we acquired from UEC through the asset swap. You can see down to the bottom left, SR13, the blue shape is actually one of our existing West Slope properties. So you can see it's just contiguous to Slick Rock. So certainly we think there will be some opportunities for a consolidation when it comes to resource estimates or economics or production. The West Slope project, acquired back in 2018 from Cotter Corporation, consisting of 9 mines. JD8 is pictured to the right. You can see that there are adits in place. We have mining equipment within some of the mines and some stockpiled ore. So we think there'd be a relatively quick process moving those forward to production. There's been past production here up until 2006, 1.3 million pounds of uranium, 6.6 million pounds of vanadium. And our plan is to advance the 4 projects that we have resource on to economics within the next 60 to 90 days. The Velvetwood project, acquired back in 2015 from Uranium One. As I mentioned, there's past production here. Infrastructure's in place. Our plan now is to move forward with a plan of operations and environmental studies associated with the project in order to get a large mine permit in the coming months. This could potentially serve as first feed into the mill once the mill is up and running. Just in terms of the general marketplace, I think the Russian invasion of Ukraine underlined that the geopolitical risk inherent in the sector. This is something we've discussed over the past few years. Obviously, there's the potential of energy-related export controls from the West, which could affect U.S. utilities, depend on uranium coming from Eurasia. But there's also the risk of Russia deciding to turn off the spigot itself in order to restrict fuel supply to the West, which would negatively impact U.S. utilities. Finally, I think the U.S. government has finally recognized the risk inherent in dependence on Russia for material and has asked for Congress to provide $4.3 million to reduce that reliance on enriched uranium from Russia, which I think bodes well for U.S. companies, in whichever part of the cycle you sit, including production, conversion, or enrichment. And then in general, I think the fact that we're well positioned to participate in the Uranium Reserve Program, given that we do have a facility through which we can produce. There are only a handful of companies, as shown in the slide with the peer comparison, who can actually be a provider to the U.S. government or still sign contracts with the U.S. government. The U.S. government is also looking at infrastructure investment related to building out small-scale nuclear plants. So I think that also bodes well for the renaissance of nuclear and uranium within U.S. borders. The supply-demand imbalance is, become even more disparate every year. We think that's being highly recognized, especially given the boost shown through the Russian invasion of Ukraine. We've got strong fundamentals for both uranium and vanadium in general, and especially given the fact that green and clean is being embraced within the U.S. means that there are opportunities for nuclear as part of that clean energy mix. And then finally, vanadium is actually something that's been highly touted as it comes to renewable energy and vanadium flow batteries serving as a pseudo baseload power opportunity when linked with both wind and solar power. Quick overview, management directors. I'm a co-founder of Anfield Energy. I've been in capital markets for 20 years. And, we've completed 4 M&A deals on my watch and, with much larger entities than Anfield. So we've been pretty good at creating a portfolio, through which we can, potentially become a near-term producer of uranium. Josh Bleak is also another co-founder, has been involved in uranium for a number of years. Don Falconer has run publicly traded companies, has been involved with utility companies, has done sales and marketing, and has been a director in Energy Fuels in the past and run publicly traded companies in the uranium side. So we've got lots of uranium experience on our board, lots of old heads to provide guidance as we move forward to near-term production. Finally, the reasons to invest in Anfield include, we have a large portfolio of conventional assets in the U.S. and a significant number of pounds, which could be conducive to production going forward, underpinned by the Shearing Canyon Mill, one of only 3 licensed, permitted, and constructed mills in the U.S., strategically located within the 4 corners of the U.S. when it comes to prolific uranium mining. We've got a strong mix of current historic resource with upside growth potential, no greenfield projects, all brownfield. And then the acquisition of Slick Rock further bolsters our position on the conventional uranium side and the vanadium side of the business. And then finally, we are debt-free and funded to advance the asset portfolio, given that we've managed to remove the debt through our transaction with UEC.
Okay, thank you very much, Corey.